Okay. Right. End of the day. And what a day it was, folks. If anyone sat bolted to the chair like I did today, kind of a stressful day, but it ended incredibly well. And I've got the chart of AMD pulled up right now. They report earnings tomorrow. But On Semiconductor reported today, and they apparently reported better than expected earnings, and they guided well. So, and then to me, if we look at this daily chart, AMD it looked too good to pass up, and so somehow I was able to time it really well here intraday. I bought it somewhere around here. Let me see what time I bought it. Will it tell me? I bought it at 11:09. So I bought it. Sweet. So I bought it on this last red candle on this 30-minute chart. So I can't remember how low it got on me, but it didn't stay negative very long. And then something happened, and like I've been seeing that there's a big put seller on the S&P today, and like I I had already taken a small position in the S&P on Friday because it looked way too oversold. The VIX was going up and it was high and going higher. But so I'm up 62% on that AMD call, which is incredible. I do have a hedge on Bristol Myers Squibb. That's for November. I am down on that. That did lose. I was up on it coming into the day, and I did lose on it at the end of the day. But my S&P position, it's almost back to flat. And then my AMD position more than makes up for everything else today. So that was an incredible finish. Again, like this is kind of what I expected, right? Last month when we went into FOMC week, they said they were going to raise rates, and I think this week everyone's expecting a 50 basis point interest rate hike. As long as they go through with it, that shouldn't hurt the equity market, because equities do fine in the face of when the Fed hikes rates. It's just equities don't do well in the face of quantitative tightening. And so that's the big thing to look out for. But I haven't seen that they're going to start tightening this month. And so my S&P position, it's for June. So, and that's when I think they're going to start the tightening, or sometime between this week's meeting and the June meeting, I suppose. But we'll find out more. Just cycling through the charts again. The big indexes all look the same at this point. I mean, they're so correlated. Like the Russell is pretty much the only one that's different. And still, it got a huge bid just from being an equity index. Looking at the dollar, the Dixie was up again today. It hasn't breached its high, which was almost 104. But it does look like the momentum on this 4-hour chart and on this daily chart, it does look like the momentum is starting to break down. If the dollar goes down, which I hope it does, because I do like to trade Forex, when the dollar goes down, it's just really going to light a fire under equities to go up higher. And that would be awesome, since I am long equities at this point. But in my long only account, like my longer term accounts, I'm mostly in cash and I'm hedged against tech and emerging markets and Japan. So, I'll trade equities in one account and I will sit on my hands in the other account pretty much and just wait for good opportunities. But here we got the dollar. It's still knocking on on all-time, well, it's not all-time highs, but it's relative highs. It did back in the COVID crash. It hit. We are higher than the COVID crash, but it did get up to like 10. It tapped 103. It looks like. So we're beyond that at this point. But the dollar is pretty much inversely correlated with risk assets and commodities. It has been kind of a rarity that like oil has been going up with the dollar, but obviously that is related to the situation going on in Eastern Europe at the moment. So that's the dollar. Again, hopefully it pulls back, but it doesn't seem like the dollar is going to slow down this year. I've been seeing some things on Twitter from people that I think are pretty good at calling different markets, saying that there's a good chance the dollar goes to 110, which is going to devastate emerging markets. And if China stimulates, Janet Yellen is going to take the dollar to 120. And I am long the US dollar versus the Chinese yuan, and I am up on that position. So we'll see. Oh, it looks like AMD just hit 90, so I am in the money now. So that's awesome. Looking at the gold markets, so yeah, a continuation of where we left off this morning. I did nibble on a tiny amount of gold in the morning. Mainly because it is below that Bollinger Band, so a reversal is likely. Because these Bollinger Bands, they are volatility proxies, and so they are points of likely mean reversion or reversion to the mean. But you can't really just trade off the Bollinger Bands. You do kind of need some momentum indicators, and unfortunately they didn't really line up perfectly. But that's okay, because my position in gold isn't that big at the moment. And it does, yeah. So far this week, it's already changed how the monthly indicator looks. Whereas this one was that darker red. Now it's a bright red, indicating a bearish MACD indicator. But the squeeze still looks pretty good, pretty positive. So, we'll wait and see. But I don't know if I'm going to be adding any more to this until it starts going up. But it's at the point where it should start going up if it's going to. Looking at the 10-year yield, made new high today. Again, it's impossible to own bonds at the moment. The only bond trade is long the short end and short the long end of the curve. So this 10-year yield going up, it's going to make like technology and those long duration assets is going to make it really hard for those to have any sort of appreciation in this market. So, that's why value is outperforming growth, because value actually generates something right now. Like value companies can give you cash, whereas companies like Roblox or Tesla or these things that'll take 10 years before they start meaningfully making money, investors are clearly going to prefer some type of company with cash flow immediately, because all signs are pointing towards we are headed into a recession. I don't think we're there yet, because I think certain parts of the economy are still growing, but they're growing slower. So that is the concern. So crude, I did put on a crude trade in one of my other accounts, in my long short account. I went long a drilling company, and I shorted a tool and accessory company against it. But yeah, crude was up today, and so it has been bouncing around in this range, but it's the right geopolitical environment for crude. It's not the right GDP and growth and inflation environment for crude, but geopolitically, the risks of Russia and Ukraine are outweighing the more economic environments for crude. So natural gas going up as well today. I do have a small position in Southwestern Energy that I put on, I think, last week, or it was last week, and it's up today. When I put it on last week, it shot up like 5% that day, and it pulled back to just up 1%. But it was up again today. But the big story here is the VIX. So the VIX is the volatility index, and it's the buying and the selling of the S&P 500. I'm looking. Yeah, I got this little. Yeah, there's not enough space on the main subgraph to display rollover lines. Yeah, don't ever notify me that again. But yeah, looking at the VIX, big red candle bar here at the last one of the day. So that's why the market shot up. So let's see, did the S&P even? How did it finish? So the S&P finished up today, so that's hilarious. Yeah, up 0.6% after being down like over 1%. So that's that. And luckily that happened because unfortunately when volatility gets high, it begets more volatility because it encourages more people to sell. People that buy without conviction, people that buy pay too much. All those things all start to factor in the human psychology of, you sell when it's down, you buy when it's up, right? Which is the opposite of what you want to do. That type of stuff comes into play. So it's good to see a big red bar here and a dark green bar here. So that means the momentum may be broken on the volatility index. So when we zoom in on the 4 hour, again, similar thing on the MACD. Big red, and then a little bit of rolling over here on the MACD. So if that rolls over throughout the night, we are going to have a good morning in the futures tomorrow. So the souffle, Tesla, up 3.7%. I mean, it looks, if it weren't so expensive, it looks like a pretty good shot to take a speculative position. The yard people are here. Okay. Gonna cut our wet mud outside. But yeah, pretty solid looking on the 4 hour chart. Tesla. This thing could get back up to 1,000. But I'm long other things, so, and I've never actually traded Tesla because it's always been too much, so, and I've never owned it, so I missed out on, I'm poor because I missed out on it, same thing with Bitcoin, right? Looking at Bitcoin, so it was only up 0.3% today. I think enough people are starting to figure out that it's not the inflation hedge that we thought it was going to be. And that's not to say that it didn't front run inflation though, but I don't know if that's too much like mental gymnastics to have to go through in order to say, yeah, it was an inflation hedge. Cause I mean, it went from, so I bought it somewhere in the 8,000s. And I just sold it up here, in the 38,000. So like I made my money on Bitcoin, so it's fine. But it's like highly correlated with like long duration assets, long duration risk assets. So it's correlated, and that's a concern, because if it's that correlated, I'll just own the assets of companies that actually produce something or yield something. Whereas Bitcoin it's a speculative asset that doesn't yield anything, and it's highly dependent on the Federal Reserve. So that's what I think about that this year, at least. Come next year, when the Fed has broken something in the second half of this year, and they have to start stimulating quantitative easing again, lowering interest rates, I may be a huge Bitcoin fan again. But we just got to get there. So wheat, not necessarily building strong momentum on the daily chart. Could be, though, because it did hit this lower Bollinger Band here on the 4-hour, and it is starting to trough a little bit, but the squeeze indicator doesn't look that convincing just yet. So I like to have the squeeze and the MACD both start showing bullish signals from these oversold levels. Then I'll take a position. So corn, a little different, but similar to wheat. You do have some bullish indication here on the momentum indicators, but nothing just screaming by me yet. And then soybeans sold off big time. So they just had a bounce the second half of the day, but monthly, daily, and the 4-hour still don't look good. So luckily don't have any soybeans, so not touching that. Copper, similar. The big buyer is going to be China, and until they come out of their lockdowns, copper isn't going anywhere except for maybe sideways and down. But monthly and daily are both, everything's bearish, but here on the 4-hour you might get a short-term bounce, but still it's not enough. I don't have all the confirmation that I would want. So tips getting destroyed, down 1.45% today alone. This is your inflation hedge, and it's going down, and inflation is still high. So, things aren't right. There aren't many safe places to hide, and that is really going to screw up markets this year. And I think the real estate ETF down 2.6%, and that's supposed to do well in a lot of different environments, and it's not. So it's getting pretty scary out there. So here's that trade: long the short end of the curve, short the long end of the curve. It was up again today, and it looks like it's going to keep going. Maybe a little pullback here, but we'll see. Same thing. Short end minus the middle of the curve, still going up. That looks even better than the long end. Because if we do have a bounce in equities, if the dollar pulls back, the long end of the curve should come down a little bit, meaning the value of those like TLT should go up. And then the one that I've been watching, waiting for a pullback, looks like we are going to get a pullback in it. Long KWEB, short QQQ. So again, Chinese tech versus US tech. Looks like it's ready for a pullback, but and it does look like this minus 280 level. It does look like that is providing some sort of resistance. I'm actually going to move this up to 280. Okay. So testing it 3 times. So we'll see how that goes. All right, now let's see. What are the futures doing here in the after hours? A little bit of a pullback. Here's my gold bar where I think that's kind of the launching point once it gets past there. So really good sign so far. But let's see, what do we look like on a 4-hour? Not terribly convincing one way or another. Same thing on the daily. Starting to get some bullish signals on the MACD down here at the bottom, but the squeeze indicator, not convinced just yet. But if we zoom into the 1 hour, both of those are bullish, the squeeze and the MACD. So, and it, looks like it's still going up. So, fingers crossed. No nukes tonight, please.